Jam-packed open houses, multiple offers above listing, people removing contingencies. What the heck is going on? In today's video, I'm going to talk to you about what's going on in the real estate market. If it feels like 2021, is that where we're at? I'm going to show you some data that might point to us not being there, thankfully. But anyways, stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, licensed in 47 states. To connect me and my team, go to greatmortgagebroker.com. I'm going to make this video because I want to show you a lot of people who are entering the real estate market for the first time are surprised and kind of disappointed with how competitive the market feels towards the beginning spring market of 2023. In a lot of markets across the country. I'm going to talk about Sacramento, California specific. It's the market where I live and I do a lot of business in, and whether or not we're at 2020, 2021 levels when it comes to multiple offers, when it comes to how competitive it really is. I'll tell you about real life conversations I had today, I had yesterday, I had the day before with buy-side agents, with list-side agents, with clients, right? And so it's real-time data on what's going on in hotter markets across the country. Sacramento, California certainly is one of those, especially at or near the median list price. So let's take a look at this graph. My good buddy, Ryan Lundquist, SacramentoAppraisalBlog.com. This is his graph. Make sure you go check out his blog. He's got a bunch of great stuff on there. Okay, so sales with multiple offers in the Sacramento region. This is the graph we're looking at, and it goes back to, it looks like 2017. During the hottest months, it peaks, and 55% of offers are getting, 55% of homes are getting multiple offers. Then in 18, when it peaks, that number is 52%. In 19, it's 49. In 20, it's 51. And then, of course, 21, interest rates, historic lows. Things are as crazy as ever, not just in Sacramento, but all markets, right? 75.9% of sales have multiple offers. Some would even argue that, like, the data that's being input, they don't always check that box of multiple offers. The number could have been higher, but whatever the case, like, it is absolutely bonkers. This is one of the indicators to look at to see how hot a market truly is. And then early 2022, before we saw an uptick in rates, 70.1. Look at how it just drops off of a cliff. It's always seasonal, always see the ups and the downs. But then it's a little bit more pronounced here in 2022 as, mortgage interest rates went up and, that pulled back demand to where things weren't getting as many multiple offers. Then here we are today, 58.9%. As you can see, it's substantially higher than any other year, excluding the last two, which we know was a function of very low interest rates, which fueled demand and made markets really, really competitive. So the 58.9% of homes getting multiple offers is one of the indicators you can look at. You can look at actives versus pendings, and Ryan Lundquist does a great job on SacramentoAppraisalBlog.com showing that to kind of gauge how hot things are. I'll give you some data that's not a graph. It's just me talking. Talk to listing agents today, and multiple offers went in over the weekend from multiple different agents at multiple different price points. And here's what I heard. Yeah, Matt, your buyer wrote a great offer. Agent did a great job, wrote a great offer, but I've got 13 offers. Some are substantially higher than yours. Some have even better terms as far as how quick they're going to close. how early they're going to remove contingencies, and maybe they had bigger down payments, whatever the case may be. That's competitive. At a price point that I thought would be even less competitive, a little bit higher, it was still a multiple offer situation, 3 or 4 offers at something that was about 150% of the median price here in Sacramento. The offers that went in over the weekend at or near the median price, about 500,000-ish in Sacramento, the stuff that was priced right and showed well, it's really, really difficult. I think one of the offers that I was really surprised at the feedback I got from the list side agent was an offer that I thought was very well written, very strong, 40,000 above ask, relatively short closing time frame. We've got a full file on well-qualified clients. I was fine with having the agent shorten the appraisal contingency, shorten the loan contingency. I think in this case, they even said, we won't even do an inspection contingency because we know there's a little bit of work to be done. We're fine with that. They wanted to keep their appraisal and their loan as a backstop and just, protect them, but still weren't even in the running, right? At $40,000 above list price. So it's a testament to how hot the market is. With all that said, I'm going to use these last couple minutes to just give advice to both buy-side agents and to the clients. First, to the buy-side agents, a lot of the feedback I got, and I'm going to share this with agents who I work with closely, is that in the situation where there's multiple offers at or near the same price, of course, having a lender who's able to follow up and provide that certainty that, yes, we've got a full file, we can close quickly, is a factor, and that helps. Having an agent with a great reputation that's communicated and called the list side, that helps. What made or break a couple of these offers was the terms within the contract. How quick are you removing the contingency periods? Inspection, appraisal, and loan. How quick can you close? For some of these, if they're buying forward, what was really attractive to one of them specifically was the fact that they were going to remove all the contingency within 10 days. If you're a buyer, you don't know what that is. It's basically saying, I've got these things in place to protect me and my earnest money. So an inspection contingency says, I've got 7 days or 10 days to inspect this property. And if I find sewer damage, foundation damage, I can back out and receive my earnest money deposit back. If that contingency period is 12 days for an appraisal or 14 days for a loan, for the first 12 days, you get to have that appraisal done and see what that appraised value comes in at. And if it doesn't jive, and if that's not written into the contract, you can back out and receive your earnest money back. Tightening those up, which means shortening them, is attractive to sellers, especially ones that, have a vacant home, they want to sell fast, they're already gone, or they're looking to move forward, whatever the case may be. And so having a great agent that's able to communicate, find out what's important to the seller, and then write a contract that matches what's important to them is vitally important in this market. One thing I'm also seeing, and this is my advice to the buyers now, is that some buyers say, well, thanks for all the advice, Mr. or Mrs. Agent, but $590 is what I want to offer on this house. And I want 30 days to close because I don't want to have to move too fast. I got a vacation planned in 2 weeks. And it's great as a buyer to have your advice and your input and how you'd like to do things. But having a great agent, the best agents I know are really, really straightforward with their buyers. Do you want this house? We're in a competitive market. Here's what it's going to take. If you're willing and able to do it, great. If not, it's not likely you get this house. 30-day contract, not likely to do it. $590, it's not going to get accepted. I've talked to the listing agent. They've already got stuff above 600, and I pulled as much information out of them as I could. If we wrote at 610, if we could close in 17 days, If we could remove all our contingencies in 12, we've got a shot. That's how I would write. And that's what great agents are going to do. And then it's on the buyer to listen and take that advice of a great agent. If you don't like or trust your agent, it's a good sign you don't have the right agent. So if you've picked the right agent that you like and you trust and you've been referred and you've seen the great reviews, then it's on you to listen to their advice. So hopefully this is helpful. Again, if we can help in any way, greatmortgagebroker.com. We're happy to help. That's the place to get started. Get yourself pre-approved, get your numbers in order, then go out there and navigate this crazy market.